Senior management knew about the illegal trading but failed to report it to regulators, and the scandal threatened to destroy the firm and potentially destabilize the U.S. financial system. Berkshire stepped in. Well, they were a major Salomon Brothers shareholder.
Yep.
And so Buffett steps in 1991, August 1991. And when the scandal broke out, CEO John Gutfreund resigned. Buffett was elected interim chairman, and he immediately began this whole campaign of transparency and cooperation with regulators. And during the testimony, he said, "Lose money for the firm and I'll be understanding. Lose a shred of reputation and I will be ruthless." And that's, I mean, it's one of those things where businessmen that are successful are ruthless. I think to be successful, you have to have a degree of ruthlessness in you.
Yeah.
And this is really just across the board in sports. I was watching this, I can't, just in the recent Olympics, I can't remember the exact sport.
Okay.
But she seems, she's like, I think an American or Canadian, played for Japan, if that gives hints to anybody. But she was basically like, there's my on-field personality and then my off-field one. With my friends, I'm really nice. In the competition, I'm trying to kill you. Like, she was like, and I have to draw those lines because I don't want to be like that with my friends. But in this arena, in this domain, I turn on this switch and I go into a different mode. It's the Mamba mentality. It's that type of stuff where you know where you're at. And I think with Warren Buffett, he has that same degree of ruthlessness in him. I don't think he's ever been shy about that. I think the difference is what he's ruthless about.
It also doesn't come out as blatant, I would say. Like when you see an athlete be ruthless, you can kind of get that feeling. When you see a business person be ruthless, you almost never hear about it in terms of like straight up what happened. It's always in like a roundabout way of like, oh, this merger and acquisition happened, or they got this tax cut, or something happens, right?
Well,
it like murkies the water a little bit.
Well, you could parallel it with Elon Musk's ruthlessness when he came into Twitter and said, hey, all of you guys
That's a good one. That's a good public one.
Yeah. And then versus his right here where he was like, hey, you guys are like killing our reputation. Warren Buffett is more on reputation, trust.
Yep.
Elon Musk's ruthlessness is more on efficiency, I would believe, and pushing the ball forward in that regard, which is slightly different.
They both have their merits.
You see Mark Zuckerberg is very ruthless about acquisitions.
Yeah.
And trying to get things done, and then if he can't acquire you, then he's going to go out here and outcompete you. Copy you, try to outcompete you, and take up your market share and go head to head. But you do see that degree. They're all different strategies.
Right.
You know, there's like, hey, trust and reputation wins, but it's also needed when you're dealing with investing and insurance.
Oh yeah.
To kind of counterweight it, and then, hey, we don't necessarily need to acquire. We can just be optimally efficient, and that means that we're not going to waste, etc.
Right.
With the Elon standpoint, and then Zuckerberg, hey, we want to work with you whether you like it or not. Okay. So there's the different dynamics there, but all of them are really, really, really adamant about these domains that they think to be important. And then kind of moving through here, there's the phase of the .com.
Ooh, yeah.
And this is where he took a lot of heat in the .com era, like the mid 90s into the 2000s, because he just wouldn't invest.
He was on the sidelines.
His technology companies.
Yeah, I mean, just like he is now with AI.
Mm-hmm.
Still on the sidelines. Is not because it's not a good opportunity.
Mm-hmm.
It's just not in his wheelhouse.
Yeah, and and they're very adamant about sticking within your circle of competence.
Yeah.
People were criticizing him, saying he doesn't know what he's talking about, like stuff that we've seen recently too. His way of investing is old, but he just said, I don't invest in things I don't understand, and he was vindicated because there was the tech bubble. Because the thing is a lot of these people, and Gates said this, people overestimate what can be accomplished in the short term, and underestimate what's going to be accomplished in the long term.
Right.
And if you have the ability to wait and be patient, there's a lot of value that you can gain a lot of intelligence and be able to invest more accordingly, and more profitably down the road.
Do you think he was vindicated though?
In the sense where there was a lot of So it says, where was it? In these notes here, Berkshire's they underperformed dramatically in 1997 and 1999. So that also added the whole fuel to the
The
criticism.
pressure, yeah.
And then the bubble burst in 2000 to 2002, destroying trillions of dollars in tech valuations. And so I think for that period of time, he was vindicated.
That's interesting.
Because again, you don't have to make money the way that the popular crowd is making money. There's plenty of ways to make money.
Oh, it's true.
Especially when you're in a position like him.
That's true. Yeah.
So then you look at it and he held out through this whole time. And 2008, and this is where we'll kind of wrap it up. But it goes 2008, the financial crisis happened, and this is when he really went in and basically bought up a whole bunch of stuff. And this is where you hear the famous quote of "Be greedy when others are fearful, and fearful when others are greedy." As the financial system collapsed in 2008, Buffett deployed capital aggressively, and this is largely from all the savings that he had from not buying in 6-7 years earlier. Goldman Sachs, he invested $5 billion in preferred stock. So you go in and you say, I don't want the
common
preferred stuff, okay? And that also happened with Coca-Cola, by the way, too. He has his preferred stocks, and he got a better deal because of just the position
Warren
that he was
Buffett.
in.
Yeah. I think he also said, I don't know if this was after the 9/11 attacks or if it was in the 2008 crisis, but he said, buy American, I am. He's buying America, essentially.
And he said that, he was like, over my 80 years of investing, I haven't really seen a time where it makes sense to bet against America. So
yeah.
But then he goes, invested with a 10% annual dividend. So invested $5 billion in preferred stock with a 10% annual dividend, plus warrants to buy common stock at $115 per share. When Goldman redeemed the preferreds in 2011, Berkshire earned $3.7 billion in profit, plus valuable warrants. He invested $5 billion in Bank of America and preferred stock, paying 6% annually, plus warrants to buy 700 million shares at $7.14. Bank of America shares eventually rose above $31, making the warrants alone worth approximately $21 billion, a $16 billion profit. Also invested in General Electric, Wrigley, Mars, and Dow Chemical during the crisis. Buffett's actions helped stabilize markets